Welcome back to Market Fatafat, a show where we highlight all the counters that are buzzing either on the back of the news flow or on the back of the technicals. And on the technical front, let me welcome Aamar Singh, Senior Vice President Research at Angel One. Hi Aamar, very good afternoon, and let's talk about the first counter that you have got for our viewers, and that is Solar Industries. Tell us, how is this counter looking on the technicals?
Yeah, a very good afternoon and thanks for having me on the show. So I would say the stock is in a secular bull rally. Yesterday we did witness some sort of correction, but again the stock has bounced back with a vengeance. Today it's up by almost, if you look at around 7.5%. So this is one stock which continues to be strong and firm on the charts. Somewhere around 8,000, 8,100 is a zone where the stock would meet with some sort of resistance. Taking that out, the stock has the potential to rally towards 8,400 levels. On the downside, the stock seems to have formed a very strong base around the 700, 7,800. So that should act as an immediate level of support for this particular stock.
All right, that is Solar Industries for you and Amar's take on that particular counter. But let's talk about a stock that has actually seen its first buy rating ever since October 2023. Shrishti, it's Ipca Labs for you. I was going to ask you any guesses, but there you go on the screen. Ipca Labs, it's seen its first upgrade coming in ever since, or rather first buy rating ever since October 2023. You have HSBC, which has gone ahead and upgraded Ipca Labs to a buy rating from a hold rating. Not just that, they've raised the target price also to 1,335 rupees per share from 1,125 rupees per share. What they're saying that they're expecting Ipca Labs to see a notable margin expansion. This on healthy growth in focus markets like India and UK, and also easing cost pressures. They're also saying that they're improving productivity of India's sales team, and the pickup in newer segments such as derma will be pushing up the sales at a CAGR of 14% for FY 24-26 in India, which is Ipca Labs' biggest market. So given the fact that they are expecting things to be much better, at least in the India market, and also they believe that the start of the US supplies will be a key catalyst for the stock. Therefore, HSBC has gone and bit the bullet, gone ahead, upgraded the stock to a buy rating from a hold rating, and Ipca Labs trading higher, snapping two-day losing streak.
Okay, so that was HSBC's take on Ipca Labs. Well, a couple of stocks that are in focus on the back of the brokerage note, Cheryl, are the steel counters. They seem to be shining a little bright in today's trading session, and that's on the back of Morgan Stanley notes, where in a lot of counters they have gone ahead and raised the target price, though they are not still very positive on the steel sector. They say that the domestic supply is still higher versus the demand in the domestic market. There are limited upside triggers for the spreads, and they do not find the valuations attractive at this point in time. But in their modeling for sale, though they have downgraded the rating to an underweight, but they have hiked the price to 100 rupees now versus 85 rupees earlier. For JSPL, they have a target for 655 rupees, and Tata Steel, they have raised the target price from 120 rupees earlier to 135 rupees earlier. But one of the other reasons that why these steel counters are shining in today's trading session is the dollar index, which is still hovering around that 102 and 103 odd level. But nevertheless, this is Morgan Stanley's take coming in on the steel counters.
All right, that's Morgan Stanley on the steel counters. But Amar, let's talk about a counter that was very much in news with the rest of the Tata group of counters last week. And I'm talking about Rallis India. That one also saw a very healthy, very sharp uptick, and that's what the charts are also indicating, isn't it? That last week the stock saw a sharp up move, did correct after the clarification also came in, or other news reports came in about dismissing the IPO route coming in for Tata Sons. Where do you see Rallis India headed from here on? Because in the last 6 months, it's done absolutely nothing.
Yeah, that's correct. So if you look at the stock has been in for consolidation, because as recent as 7th of March, the stock had made a high of 294. Currently, it's around 254 odd levels, or 20% decline over the last few trading sessions. However, what we see is that the stock seems to be very strongly supported around the 230, 240 zone. And even on the intermediate term trend or the long term trend, that's acting as a very strong support. So the stock needs to sustain above the 260, 265 mark. So sustaining of the 260, 265 mark, the stock has a potential to rally at least 10 to 15% from those levels. So this is one stock one can keep a watch on, and the level to really watch is 265.
All right, moving on then, let's shift focus to a couple of banking stocks. And Shesha, tell us why Federal Bank and South Indian Bank are in focus.
Well, yes, both these counters are in focus on the back of an RBI directive that came overnight, where the RBI has directed both these banks to stop issuing co-branded credit cards. It also says that detailed reasoning for the restriction has not been mentioned in this RBI directive, but banks have ensured to rectify the deficient areas before fresh issuance of co-branded credit cards. Now, just to give you some background, RBI had issued a directive on March 7th which said that all co-branded credit cards will prominently display the name of the issuing bank, and they also instructed co-branded partners to not have access to any transaction of the credit card user. This comes with a viewpoint to prevent unauthorized entry into credit card industry. So this was the background, and now that the RBI has issued fresh instructions, both these counters are in focus. South Indian Bank, of course, has recovered sharply from the lowest point of the day. It was trading in the red when it started, but now has recovered from the lowest point of the day. We have Federal Bank, which is reeling under pressure, 1.5% lower in trade as we speak.
Moving on, Amar, let's talk about HEG. This one is also known as a high beta stock also, as well. This along with Graphite India, when they move, you only see sharp moves. Today the stock is up by about 6% or so, but if you look at a longer term or what the stock has been doing of late, where do you see it headed from here on?
Yeah, I would say you're right that this is one stock which has been consolidating. So it's been very good from a trading perspective. So the range, if you look at the stock, was finding very strong support around the 1600 levels, whereas on the upside somewhere around 1850, 1900, that's a zone of resistance for the stock. Having said that, if you look at the long-term charts are positive. Short-term, we are seeing, intermediate-term trend, we are seeing the stock moving from oversold territory, and today the stock has bounced back. So the level to watch out here is, as I said, 1850, 1900. That's an immediate zone of resistance. If that is taken out, then the stock is headed higher towards the 2000 mark, because the short-term trend remains positive, long-term trend remains positive, and intermediate-term trend, we are seeing the stock pull back from an oversold territory.
All right, moving on then, and let's shift focus to the real estate player, that is DLF. And Snehi, tell us what's the news flow coming in on DLF?
Well, absolutely, Shrishti. So, DLF IT Offices Chennai, which is a wholly owned subsidiary of the company, has sold land at measuring 4.67 acres situated in Chennai to Cholamandalam Investment and Finance Company for a value of 735 crore rupees. So, that's one news flow. And in a separate regulatory filing, the company has also informed that the board of directors of DLF Home Developers, which is also another wholly owned material subsidiary of the company, has approved the proposal for fundraising by the way of issuance of senior secured rated listed redeemable guaranteed rupee denominated non-convertible debentures or NCDs for an aggregate principal amount of up to 600 crore rupees on a private placement basis. So on the back of this deal that they have struck with Cholamandalam for 735 crore rupees and on the fundraising plans up to 600 crore rupees, DLF is a stock in focus today. Not trading at the highest point of the day, up just 0.2% as we speak, but was trading with gains of 2 and 3% earlier in the day.
All right, that is DLF for you. Right now trading flat with a positive bias. But coming to you, Amar, let's talk about Natco Pharma, and how is this one looking on the charts to you now? 11% up move in the last 6 months.
Yeah, I would say this is one stock which was consolidating, and then it witnessed a very sharp move. And then again, consolidation is what we are witnessing. But the interesting part is that from a long-term perspective on the monthly charts or the short-term or the intermediate-term trend from a weekly charts, the stock is very strong on those charts. And what we are seeing on the daily charts is the stock did correct, found a very strong support around the 900, 920, 930 zone, and from there it has bounced back. So also on the daily charts, the stock is now pulling back from the oversold territory with a very strong support at the level. So this is one stock one can definitely look at. On the upside, the stock has a potential to rally towards the 1100 mark once the stock sustains above the 1030, 1040 zone.
All right, 1030 and 1040 are the targets coming in for Natco. But with this, viewers, it's time to slip into a very short break. But before we go, in the upcoming special segment of Sundaram Mutual presents Wealth Creators SIP Edition Nivesh Day, we delve into mutual funds in simple terms with a spotlight on top-up SIPs. Learn how these can enhance your investment strategy in this segment right here.
Welcome back. You're watching Market Fatafat on ET Now. Let's continue with the stocks. And Shriram Properties is another counter that is in focus in today's trading session. It saw a sharp up move also on an intraday basis, continuing to hold on to strong gains in excess of about 10% or so. The company yesterday, right after market hours, informed that they've launched a new residential project which has a revenue potential worth of about 350 crore rupees. On back of that, the stock has snapped a 3-day losing streak given the fact that they've launched a new project in Bangalore and also that it has a sizable revenue potential. So Shriram Properties 10.7% up move today.
All right, moving on, another stock which is seeing decent gains, that is IFB Industries. And Aamar, tell us, how is this chart placed on the technical front?
Yeah, so if you look at IFB, we are seeing that the stock has bounced back and is consolidating at the current levels. So if you look at the long-term charts, for the stock remains strong and positive. However, if we go back in time, so somewhere on the upside, the stock has got very strong resistance coming around the 1500 odd levels. Look at the stock from a daily perspective, it is bouncing back from the oversold territory. But it's more of consolidation, which is we are witnessing in the stock with some bias, positive bias. So till the time we don't see the stock sustaining up the 1420, 1430 levels, the stock would trade sideways. Above that level, the stock has a potential to rally towards 1500, 1520 levels.
All right, moving on, let's shift focus to another stock. We don't talk about this stock much often, Gerald, but this stock is Bajel Projects. 2 order win announcements coming in for this counter, and both of the orders coming in from Power Grid. One of the orders is worth 358 crores when the company bagged an order win for the supply of goods and services for a transmission line package, and the another order coming in from Power Grid is worth 92 crores, and that's for another transmission line. That was interesting to note that this is a Bajaj Group company, formerly a division of Bajaj Electricals Limited, and is in a leading company in the EPC business. And on the back of this news flow, the stock is locked at an upper circuit of 5%, but the market cap is of around 2,000 crores and the order wins coming in for almost 450 crores, and that's why the excitement we are seeing in the stock of Bajel Projects.
Yeah. Earlier this week also they had a tie-up with Bajaj Electricals. You said that they were demerged from that entity. They had a tie-up of that with Bajaj Electricals as well. So maybe all of this is auguring well for this particular counter right now. But let's move on, Aamar, and let's talk about Godrej Phillips. Do you think things will augur well for this particular counter as well, given the fact that we have been seeing a stable tax regime when it comes to the cigarette businesses? So what's your take coming on Godrej Phillips? 49% in the last 6 months. Do you think this run will continue at least till the next full budget?
Yeah, I would say that if you look at the long-term trend, that continues to remain very strong and positive, and the momentum has been there. What we witnessed for the last 3 trading sessions is that the stock did correct from 3,500 levels. If we look at, so almost 3,700 levels to hitting a low of 2,840. So that was a very volatile move. That was more on account of profit booking, and also what we see is that during the period, the volumes were also comparatively higher as compared to the last 20 or 30 odd trades. Having said that, the stock has got very strong support coming around the 2,700, 2,800 level, from where the stock has bounced back. So this is one stock one can look at, but upside currently seems to be capped around the 3,300 level. So that is one level one can look at. So if anyone is long, that's a level where one can look at booking profits. The trend on the intermediate term charts, on the long term charts, they continue to remain very strong and firm. So that effectively means is that any pullback is to be used as a buying opportunity in this.
All right, so that's the take coming in on Godrej Phillips. But Snehi, tell us what's happening with ITC after BAT's exit. Tell us what's the news flow that you're gathering.
Partial stake sale.
Partial stake sale, yeah. What's the news flow that you're gathering, Snehi?
Exactly. So, London's British American Tobacco BAT had sold a 3.5% stake in ITC. Now, the update we are getting for you today is the name of the institutional investors that have bought ITC shares when BAT sold its stake. Now, ITC shares were bought by almost 30 institutional investors, and the biggest of them was ICICI Prudential Mutual Fund. Now, the Government of Singapore, Capital Group, HDFC Mutual Fund, UTI Mutual Fund, Mirae Asset Mutual Fund, People's Bank of China, and the International Monetary Fund were all buyers of ITC shares in the 17,485 crore block deal that took place. And other buyers also included HSBC Global Fund, Kuwait Investment Authority, ICICI Bank, Goldman Sachs, Max Life Insurance Company, among others. Now, the shares were bought at 400.25 per share. That was the price at which all of these institutional investors bought the shares in the stake sale. And as per data compiled from BSE, ICICI Prudential bought 4,963 crore rupees worth of ITC shares in a total of 16 block deals. So that was the biggest buyer coming in, and that was followed by the Government of Singapore that purchased shares worth 3,664 crore rupees in one block deal. US-based Capital Group bought ITC shares worth 1,064 almost crore rupees in 7 block deals as well. BofA Securities 817 crore rupees worth of shares. Society General 734 crores, Citigroup 702 crore rupees worth of shares. So these were some of the key buyers in BAT's stake sale of ITC.
That's a long list of buyers coming in for that just near 3.5% stake that BAT actually exited, sold via block deals. But on that note, thank you so much, Snehi, as well as Ashesha, Aamar and Ashish for joining us on the show and taking our viewers through all the stocks that are buzzing in trade in a short while from now as we wind down on this edition of Market Fatafat.
If you like this video, then like, share and subscribe to ET Now.